Imagine you earn $60,000 a year, but every single year you spend $68,000. That means you're spending $8,000 more than you make. So what do? You borrow money. You put it on your credit card. Next year comes, you earn $60,000 again, but now you also have to pay interest on last year's $8,000 that you borrowed. So you borrow even more. This happens over and over. 10 years pass. Now you owe $150,000. You're not poor, you have a good job, but you're in deep debt because you spent more than you earned every single year. Well, welcome to the United States of America. Except instead of earning $60,000 a year, America produces about $30 trillion of GDP each year in current dollars. And instead of owing $150,000, America owes about $38 trillion. Today, we're answering one simple question. How did the richest country on Earth end up owing more money than almost any country in history? Chapter 1. What is debt? Let's start with the basics. When you borrow money from a bank, you get a loan. The bank gives you the cash today, and you pay it back tomorrow with interest. Simple, right? Same thing with governments. When the US government needs money, it doesn't just print it. Instead, it issues Treasury bonds, IOUs the government sells to raise cash. Think of it like an IOU note. You lend the government $1,000, and the government promises to pay you back $1,050 in a few years. That $50 extra is interest. Millions of people, companies, pension funds, and foreign investors buy these Treasury bonds. That's how America borrows money. Chapter 2. The deficit versus the get. Here's where people get confused. Deficit and debt are not the same thing. A deficit happens every single year. It's when the government spends more money than it collects in taxes. Let's say the government collects $100 billion in taxes this year, but it spends $120 billion. That $20 billion gap, that's the deficit for that year. But debt? That's the total of all the money the government has borrowed over time and hasn't paid back yet. Think of it this way. A deficit is like overspending on your credit card this month. Your debt is the total balance you owe on that card forever. So when you keep running a deficit every year, spending more than you earn, your total debt just keeps growing and growing. Chapter 3. The big numbers. Alright, let's talk about the actual numbers, because they're shocking. The United States national debt right now, about $38 trillion. To put that in perspective, that's about $110,000 to $114,000 for every single American person. If you have a family of 4, your family's share of the national debt is roughly $440,000 to $456,000. Now, you might think, well, that sounds bad, but isn't America rich? Yes, America is very rich. Our total economic output, our GDP, is about $30 trillion a year current dollars. But here's the problem. Our debt is around 120% to 125% of our GDP. Imagine you earn $100,000 a year. That would mean you owe $120,000 to $125,000 in debt. For most people, that would be completely unmanageable. And here's where it gets really scary. The government is still running a deficit. In the latest fiscal years, the deficit has been around $1.8 trillion. That means the government spent about $1.8 trillion more than it collected. So every single year, that $38 trillion number gets even bigger. Chapter 4. Why did this happen? So how did America get here? Well, it didn't happen overnight. Let's rewind. Go back to the year 2000. America's national debt was about $3.4 trillion. Fast forward to 2008. The financial crisis hit, banks collapsed, people lost their homes. The government had to step in and spend massive amounts of money to rescue the economy. Then came 2020. COVID-19. Factories shut down, businesses closed. The government again spent trillions of dollars to keep people and businesses alive. So yes, some of the debt came from emergencies. But here's the thing most people don't realize. Even during the good times, America was spending more than it earned. Why? Because the government does 3 main things. 1. Social Security and Medicare for retirees. That's huge spending. 2. National defense. The US maintains a large global military footprint. That costs hundreds of billions every year. 3. Everything else, roads, schools, government employees, Infrastructure. The problem? The government collects just enough in taxes to cover some of these things, but not all of them. So it deficit spends, it borrows, and that debt keeps growing. Chapter 5. The Interest Bomb. Now, here's the scary part. It's not just the debt that's growing. It's the interest on the debt. Remember how I said when you borrow money, you have to pay interest? Well, in the most recent fiscal year, America paid around $1 trillion in interest alone. That's not paying back the debt. That's not building roads or schools. That's just the interest. And get this, in the federal budget, net interest payments are now one of the very largest expenses, behind only Social Security and Medicare, and they now exceed national defense spending. Think about that. America is paying more in interest to its creditors than it spends on national defense. And here's the trap. As the debt gets bigger, and as interest rates go up, the interest payments get even bigger, which means less money for roads, schools, and everything else. Chapter 6. Who does America owe money to? Okay, so America owes $38 trillion, but to who? This is where a lot of people think China owns America, but that's not accurate. Let's break it down. About 80% of the debt is held by the public, domestic and foreign investors, funds, banks, and the Federal Reserve. And about 20% is held in intragovernmental accounts, like Social Security and federal retirement funds. Now, of the foreign portion, the top holders are Japan holds about $1 trillion in U.S. debt. The United Kingdom holds roughly $700 to $800 billion. China holds around $750 to $850 billion, less than Japan. Other countries like Canada, Brazil, and India also hold significant amounts. So the idea that China owns America? Not really. It's spread out. And actually, most debt is owned by Americans and U.S. institutions. Chapter 7. Why should you care? You might be thinking, okay, this is interesting, but why should I care? Well, because this affects you directly. First, higher interest rates. When government debt is high and confidence is shaky, investors demand higher rates. That means mortgages get more expensive, car loans get more expensive, credit card rates go up. Second, your taxes might go up. If interest payments keep eating up the budget, the government might need to raise taxes or cut services to pay for other things. Third, inflation risk. If the government keeps running big deficits, it can add pressure to prices. Your money buys less. Fourth, slower growth. When a growing share of the budget goes to interest, there's less left for things that support jobs and growth, like infrastructure, research, and education. And finally, your generation's burden. The longer we wait to fix this, the heavier the load becomes for younger Americans. Chapter 8. The Debt Dilemma. So, to sum it up, America's $38 trillion debt came from decades of spending more than we earn. It was accelerated by wars, recessions, and emergencies. And now, the interest payments alone are eating a bigger share of the budget than national defense. This is not a problem that will go away on its own. It requires tough choices about taxes, spending, and priorities. But the first step? Understanding it. Which is what you just did. Now you know why America is in debt, and that's the first step to thinking about solutions. Thanks for watching. If you found this video helpful, don't forget to like the video and subscribe for more simple finance breakdowns.